What is up, beautiful people? Welcome back to the Trading Dojo. I know you haven't seen me in a while, and I haven't seen you guys in a while, but I honestly really enjoyed the weekly recaps that I did, and there's not much gold traders that trade ICT. So I'm gonna give you guys a breakdown of gold, and specifically the setups that you could have potentially taken this week. We're kind of just gonna review the price action, what days it was good, what days it was bad, and what the weekly profile for the first trading week of August was like. And honestly, if you came in with the wrong narrative this week, you would have gotten wiped out. Because this week we had sessions where the market literally moved hundreds of pips, and if you came in with the wrong narrative, you would have gotten wiped out. So without further ado, let's hop in the charts and let me show you the exact setups that you could have taken this week. Okay, so as I constantly educate you guys on my Marquee Trades YouTube channel, to start off your week, you should always start with the highest time frame with the relevant inefficiency. So inefficiency would be a fair value gap, and you can see I have one marked out right here. Now, why am I using the daily instead of the weekly? Like, the weekly is a higher time frame than the daily. But that's because on the weekly, there are no inefficiencies, and the only relevant one may be like this one or this one right here. They're so far away, and you can clearly see we're inside of this consolidated area. So if we scale back down to the daily, you can see we actually have some on the daily time frame. And if there isn't any on the daily time frame, I'd be really careful trading in the first place, because I always want to be trading around an inefficiency that's going to kind of determine where the market is going. And you can already see this is Monday's range, Tuesday, Wednesday, Thursday, Friday, and today is Friday, right? So I'm doing a weekly recap from the end of the week, and I'm kind of just going to break down the potential setups as an ICT trader on gold that you could have taken. So here we can see that there is a narrative for every one of these days. You can see that Monday's range had kind of like a move in both directions. That's because we ran into a bearish fair value gap, and we ended up closing inside, respecting this bearish IFVG and the bearish fair value gap. So the second candle, going into that one, we were obviously also expecting sell side. Now this candle also closed inside of it, respecting it. So the third day of the week, we would have also been expecting sell side, because it obviously respected it in the last 2 days. So we could have expected this bearish range and actually predicted that move towards sell side. Now in the Thursday's range, I'd actually say that I struggled pretty hard identifying why this happened in the first place. And at the end of the week, it's kind of clear that it just wanted to move higher. But one of the things that I was looking at was this inefficiency down here. And the reason why I was looking for this inefficiency as my target for Thursday's range was because 3 daily candles respected these gaps right here. So obviously it was respecting it, bearish narrative. So I'm coming in simple-minded, reading price action, right? So the 4th day, I'm expecting that it moves down into here, even if it wants to go higher, but it would go higher from here instead. But what ended up happening is that there's another inefficiency a little bit higher, which was an IFVG. And you can see that we tapped into that in Monday's range, in Tuesday's range, and we didn't end up taking out these lows to tap into the daily bullish value gap, which totally threw me off in Thursday's range when I was aiming for sell side. But now if we look at it, it's clear. And Friday's range would have also given you a lot of setups for buy side if you would have considered the fact, okay, now we closed above. So we take the bearish inefficiency and we use it as a bullish one. So you can see we finally closed above it here. And now during Friday's range, if you scale down, you can actually use it to take buy side trades. Now this one did tap into it. I just marked it out a little lower, but I remember when I was looking at it earlier today, it did tap into it right here, and then a second time and a third time right here. So there was multiple opportunities for you to catch longs off of that daily inefficiency. And you can see the entire week we respected it, finally closed above, and used it to go higher. Now let's break it down into weekly profiles and kind of look at what we could have expected to happen in this week. So starting from Friday, going into Sunday. There you go. So this is the open. This is Monday's range opening. Let's mark out Tuesday's range. There you go. We got Tuesday's range. I think I should actually do this only 1 hour so I can mark out midnight instead of that. There you go. Start off from 6 on Sunday because it's market open. It's going to be slightly off. There you go. And going into Friday's range. And then the close of the week is going to happen right around here. Alright guys, so what can you expect from this week? What can you kind of learn from it if you're reflecting like this? So remember, this down here is a daily IFVG. It's a bullish confluence. And you can see that Monday's range opened right there. Let's also mark out midnight open for Monday. So there you go. Monday opened. Let's already start looking at the potential inefficiencies that we had, the potential setups. So here on the 1 hour, you can see I already had this IFEG marked out. That's because you could have definitely taken a long setup off of Monday's range right here. When we opened, tapped into the IFEG and started expanding on buy side. When we started expanding on buy side, we closed up above it and respected it 1, 2, 3, 4 times. So we respected this inefficiency 4 times. You could have taken a long out of any one of these and protected your stop loss right below the low. We tapped back into it in Tuesday's range, but Monday's range ran all the way from this inefficiency after creating the IFEG into the daily bearish for rally gap that I talked about. Remember, I marked that out. That's the one that we're looking at right now. So remember, Monday's range ended up respecting it and closing below it. So here on Monday coming to a close, going into Tuesday's range now. Tuesday's range opens up, runs back down into it. So in Tuesday's range, I should have already known just from the amount of buy side that we got in Tuesday's range that this week was going to be a bullish week. No matter how much times I was respecting these bearish for rally gaps, I should have definitely expected buy side this week. And I was just foolish to stick towards my bearish narrative. So once again, we came up into it. Tuesday's range pulls back, closes below, and once again, we're respecting this daily bearish for rally gap. So Wednesday's range opens up. I'm obviously going to be looking for sell side, and that's exactly what we got. Soon as Wednesday's range opened, boom, we got some sell side. Ran back up from just a lower time frame for rally gap. I'm sure this was also a 4-hour for rally gap right here. We respected it, ran up from it, and this was the higher low that I was showing you guys on the daily time frame. And one of the reasons I was aiming for this bullish for rally gap that has yet to be tapped into because of both of these lows that failed to tap into it. Even though it could have, right? It could have easily pulled a little bit lower before going higher. Now, this higher low was never tapped back into later in the week. But this daily range ended up closing bearish as well. You can see that we pulled down. And so going into Thursday's range, I was obviously expecting sell side because three daily candles respected that gap. So going into that week, going into Thursday, I was obviously expecting now we're finally going to run on this bullish for rally gap right here before going higher. But instead, Asia sessions opens up and we're streaming this. We're looking for sell side. We get confirmation. We get this 1 hour IFEG, tapped into it once, 2 times, 3 times respected, and it still continues pulling up higher. So honestly, the price action starting Thursday just started getting really choppy, really confusing, and we just couldn't predict where the market was going. It was really hard to understand what was happening, and so like I'd say the week ends right there. Week ends, you're no longer able to find any setups, and if you're trading inside of this range, you're just a gambler, honestly, because this range is just very difficult to kind of understand where it's going. You can look on the lower time frame and you're going to see a bunch of inefficiencies that are constantly being closed above, if there even is any, constantly being closed above and just not respected. Why? Because it's just consolidating, and that's a very difficult range to trade. So inside of this range, I'd say that you're just cooked if you're trading it. But early into the week, there was some good price action. I feel like some economic event just hit on gold and it just started booming up, not really caring about anything else in the world. And so that's kind of like a breakdown of the week. The potential setups that you could have taken will be happening on the lower time frame. So once again, let's kind of hop into each session. First of all, Asia session, I already broke down this one. Asia session starts, we run down creating that daily. Let me go into replay mode. So here we have the new daily candle. It's a little too black. Let me change this up. So here we have the new daily candle. We already opened up, ran down, created the wick, created a new for rally gap. Boom. Now we ran up, closed above it. That would have been your opportunity to hop into a trade and take a long towards the target that we obviously had up there, right? We would have been targeting that inefficiency right there during Monday's range. We tapped into the inefficiency, you're done trading for the day. That's the setup that you would have optimally been aiming to enter during Asia, hold it until New York, hold it until the target gets hit that TP, you're done, right? Now let's hop into Tuesday's range. Tuesday's range, Asia opens up. Okay, we create a wick. We create an IFEG right there. Optimally, I'd be looking for sell side after Monday's range. Monday's range tapped into this, and respected the daily bearish for rally gap. So there we got some sell side, and we're going to be aiming to tap back into this, aiming for the daily bullish for rally gap a little bit lower. We tap into that thing again. I obviously didn't expect that, and I believe I was in a sell position and I didn't take profits because I was aiming for lower price. I was aiming for it to run down into that daily bullish for rally gap. That was a mistake on my part, and we obviously ran up higher, took out the high, came back down later in the day. So in this daily candle, the potential trade that you would have been able to take is waiting for Asia session to open up. Bang, you get that IFEG. You take that IFEG down to the daily bullish for rally gap, daily FEG, kind of just trail your stop loss or take partials once it hits a big level like that. Okay, you're done trading for the day. I don't know if I would have taken longs from there. I don't think that was even a good setup. It was just like a random jolt of volatility. There were no IFEGs that probably you could have taken it in the first place. It kind of closed above and just kept going on all of these. Okay, Asia session starts for Wednesday's range. What are the potential setups that you can take? Once again, Tuesday and Monday both respected the gaps. So going into Wednesday's range, you're still bearish. You got an IFEG right there during Asia session, same setup that we used for Monday and Tuesday. We also tapped into this one. You get into your position right there, and you short it once again, aiming for those lows. That's what you're aiming for. You're aiming for that daily bullish for rally gap down there. Another potential setup you could have taken. Boom, it runs down. You go break even on this position, aiming for it to go lower, and it doesn't go lower. So boom. Another unfortunate series of events. Remember, I'm not telling you that you would have taken the same trades that I did. I'm just saying I was following price action here. So as an ICT trader, if you're trading gold this week, these are likely the kind of setups that you would have been aiming for and the narrative you would have came into the week with. Right? And then obviously Thursday's range just was a little more choppy than usual. We did get an IFEG early into Asia session right here. And I was looking at this. I sent it out. I said this is the IFEG I'm likely going to use to take the trade down to this bullish FEG. So off of the rip, we start getting, as soon as this candle closes, we get a good amount of sell side. Let me show you guys on the lower time frame. That candle closes on the 30-minute time frame. Bang, bang, bang. We get a huge amount of sell side. Like that was like a good 70 to 65, good 50 pips, right? Good 50 pips of sell side. Psych, we're going higher. And so we didn't end up getting that sell side. My narrative was incorrect, and that's when I started taking some losses into the week. And that's where like the week ends, because remember Thursday, Friday just started consolidating. There were no good setups. And that's kind of like a breakdown of the things that I would have been expecting and the kind of trades that you would have taken if you were an ICT trader trading gold. The lessons that I learned is to be more adaptive, because I feel like this week I was honestly just stuck up on my bearish narrative. I kind of forgot about the trend of gold. Like we're obviously running on buy side, so why wouldn't we close up above this and continue going higher? So I definitely could have been aiming for buy side, but I don't think I did anything wrong other than maybe like over leveraging on my trades aiming for sell side. I should have been more careful considering the fact that we kept making higher lows and failing to tap into that daily for value gap that I was aiming for. So that's kind of the lesson that I take from that week, and the lesson that you guys should learn from me so you don't make it yourself. Thank you all for getting through this video. If you want to see more videos, more educational videos on my specific strategy and learning these concepts, you can find that on my Marky Trades YouTube channel. Just search that up, Marky Trades, Marky_trades. You'll find one of my YouTube videos, Ultimate Guide to Fair Value Gaps, or the strategies that I use. Be sure to drop a sub, and thank you all for listening in on this video. Hope you guys learned something, and I'll catch you guys in the next one.